Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Tuesday, July 24th, 2012. Well, a continuation of the trend to the downside today in a candle with a lower high and a lower low. That trend began 3 trading periods ago following a spinning top type indecisive candle that interacted with resistance around 1378. And for the past 3 days we've seen the market trending down quite strongly. A black body for each of these 3 trading days, and that denotes the sellers making strong net bearish progress on the day between the open and the close. If we look at the final 2 candles, however, we have seen some larger shadows on the bottom of both of these candles, and that represents the sellers losing some commitment. So a little bit of a change of momentum from the sellers from that initial downtrending day with the very large black body with no shadow on the bottom. Previous days trading, we saw the market interact with the top of the cloud and support around the Kijun-sen, which is around 1345 roughly, and we saw buying coming in for the market to close up roughly around the midpoint level with neither side taking control. So the sellers actually lost control of this market and they lost commitment. For today's trading, we saw the market take out that previous low and interact with the into the cloud and the 1333 level that I've highlighted previously as being quite an important level, and once again we've seen strong rejection from that level, so moving forward tomorrow that will be important. Now, with this loss of commitment from the sellers, we've also seen the sellers only just take control of this market. They've closed the market just down below the midpoint level, but it's only very, very weak control and pretty much a neutral market where neither side has control. So the amount of control that the sellers have regained is very, very irrelevant, to be honest. But overall the trend is still down, and that's quite important. Now, in terms of the Fibonacci extension, and we're examining the relationship of the current first time frame downtrend to the previous time the market was trending down, and we can see that for the previous day's trading the market failed to close below the 61.8% level and the 78.6%, but the trend continued on its way, and what we want to see with these ratios and the potential for a change of trend is confirmation of that change. So you'd want to see a higher high and a higher low and not see that low taken out. So that's what we'll be looking for today, because the market's interacting with the 100% level at 1330 or 1331. And we've seen strong price rejection from there, so there is a possibility that we could see the trend change to the upside. Now remember, we are trading within the cloud, so we will see natural support within that level, but combined with this 100% level, it is a very, very strong area of potential support for this market. In terms of the Fibonacci retracement, and what we're looking at is the relationship of the current downtrend to the previous uptrend, and we've seen the market fail to close below the 78.6% level. Previous days trading, the market reacted from below the 61.8% level to close up above there, and today the 78.6% level has come into play and we failed to close below there. That is a minor level, not as important as the 50% or the 61.8 or the 38.2 or the 100, but still it does suggest that there is buying coming in around this Fibonacci level, and does suggest that there is potential for a change of trend. But in terms of Ichimoku, we've had quite a change in this market over the last couple of days. Prior to the previous 2 days, the market was bullish in all 3 time frames and looked as though it did have some solid upside momentum to go on with this move until the market found strong resistance around this 1378 level. Today we're trading below the Kijun-sen and the Tenkan-sen, the pink line and the green line, which means that we have a bearish market in the medium term and fast term time frames. And the market has now turned neutral in the long term time frame by trading within the cloud. Prior to that, the market was trading above the cloud, so quite a significant change in momentum for this market. There is still a possibility we could see the market break out above the cloud here and turn into a bullish market in big picture terms again, but we will need to see some solid upside momentum for the market to take out the Kijun-sen and the Tenkan-sen. The Tenkan-sen is trading up to around 1352, so we wouldn't have all 3 time frames in unison until we do see the market trade up to there. Just looking at the Kijun-sen as well, that did turn flat and we saw price action attracted back towards there, and that is really quite a good there's always a good probability that the market will retrace and test back towards that Kijun-sen when it turns flat. Once we take it out though, the flat Kijun-sen doesn't have as much significance. But moving forward, obviously 1333 is very important. We've tested there on multiple occasions and it's been found to hold as an area of resistance and now support, so that's important. If we do test lower, we do have support roughly down around 1317 at the bottom of the cloud. But I suspect that we could see the market test to the top of the cloud, which is around 1340, 1341, and attempt to break out. If we do break out, some resistance around 1347 and then up to 1356. But we have seen over the past 2 days the sellers lose some commitment throughout the trading day and fail to take control or even strong control of this market. So even though we do have the sellers in control slightly, only very in a minor way, we still haven't seen any strength from the buyers, and that's important. The trend is still down, strong resistance overhead, strong support down below.